Hey traders from around the world, this is Jeremy Alexander Newton with Real Life Trading. We're doing absolutely fantastic. It is Wednesday, the 30th of December, 2016 is approaching us very quickly, and I hope you have amazing plans, maybe resolutions, maybe goals, maybe aspirations, but whatever you are going to do, just do it with vigor and intensity. Let's do some really quick reviews of the market, shall we? Looking at the DIA, this is the ETF that tracks the Dow Jones, and just the other day I was talking to some of my traders about the 166, 165 bull put spread on the DIA, the Dow Jones Industrial. I think this and this, so a lot of similarities to that little just clump, that area, and I think we probably still will get maybe one more roll down, possibly, and then still this kind of bounce that comes in January, potentially, like late January, February type of time frame. A possibility for sure. I'm not entirely 100% that that's going to happen, but I still do think that 2016 leads us to some bullish markets potentially overall. So if I come over here to a weekly chart, here's your long-term moving averages on the Dow Jones ETF, and you can see we did bounce off the 200 on the weekly, and we did engage right here with the 100 simple on the weekly, had a new white soldier, and we did make some higher highs and higher lows. So that says to me that we probably will go up a little bit higher overall. So still bullish, nothing really changing yet, and just keeping my eyes on the prize, I guess. Let's do a really quick review and just look at all kinds of things after I get done with some of the market ETFs. Here's the SPY. Got a trader, Michael. Is a 209.50, 214.50 January bear call spread. 209.50 is right about here, and 214 is up in this general area. On the SPY, along with the DIA, I really do like some bull put spreads down here. But now that we're up, I liked them 2 or 3 days ago. Now that we're up at towards some resistance, if you did get an opportunity to get into some bull put spreads down here, you could consider some bear call spreads up here for January and get into a really big condor. So just keep that in mind. I still think we do something like this, maybe for the majority of January. A lot of choppiness, great for swing trading. Day trading, not so much for swing trading. Let's look at some individual equities. Here's Apple. I'm going to spend a little bit of time on Apple. There's a lot of support at 105.90. I have to eat an apple covered in mustard. If Apple breaks 105, don't want to do that. Don't like mustard at all. This could be really a flag pattern. Notice the volume decline, or it's going to pop here. And I have no idea what's going to happen on Apple. This would be a great place to bracket trade Apple. Could be a little bit of a double bottom down here. Really looking for a break above 110 or a break below 105. That would be bullish. That would be bearish. This is at a support level. If you're longer term bullish on Apple as I am, you could buy down there and just place the stop at 105. Totally your call. But regardless, coming over here to a weekly chart, you'll see that there is the 100 simple moving average right where we are, and we're getting declining volume and some doji. So again, really looks almost picture perfect for a flag. We even had a bearish retest gap on a weekly chart. So this could be the retest. Again, if we do roll over, I'm going to be bearish on Apple. Yes, I'll be wrong. Yes, I'll probably eat an apple for you guys, covered in mustard. That'll be horrendous. But regardless, my objective is going to be protect myself and maybe make some money on the downside. So keeping an eye on Apple today is a little bit of a new black crow. Here's your exponential moving averages on the daily chart and the exponential moving averages on the daily. You can see that we've really just battled the 10 very, very nicely. So this is going to be kind of a do or die level on Apple, I believe. Disney, had a long talk with Leon today about Disney. Disney looks to be in a kind of an interesting position. So I said a few days ago, if Disney doesn't bounce soon, it won't, and it didn't. So I don't think it does. There's a strong resistance area about 108 on Disney. So Disney has broken through that level. If you're a fan of Elliott waves, I think this is a 1, 2, 3, 4, 5 A, B, C. So I'm trying to figure out how far the C wave will go. It could be kind of right about here, but again, based on this volume, based on the filling of this gap, based on this bearish gap and go, and again, if we come over here to a weekly chart, based on the similar high that we sold off from right about here, I think Disney pulls back a little bit more. It doesn't necessarily have to, but I would love to see Disney get into this little channel, boom, 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 pump all the way back to $95 and then bounce. Not entirely sure if that happens, but if Disney does make its way down into the 95, 96, 94 area, I think that'd be a good longer term buy without question, based on some of the Star Wars numbers and park attendance, and those are fundamental data. But based on technical data, we've bounced there before, and we can bounce there again on Disney. Ticker symbol FCX, which is Freeport McMoran. This stock is down here at $6.76. So the last time I really looked at this one was back on the 16th of November. I mentioned there's two possibilities. FCX bounces off of this support or makes a little bit of a double top and then rolls down. Boop. There was the, so B was actually what ended up happening. So it broke 11.18, traded back down to support, and now has broken that support of $8.49. FCX is getting pummeled like if it was in a Mike Tyson fight. This gap that happened just the other day likely will get filled. It was a white candle gapped up, looking like a bullish retest gap, and we'll probably trade down a little bit lower on FCX. Where's the bottom going to be on this one? I'm not entirely sure, but remember, this stock was in the $30, $40 range not too long ago, about a year ago. Here's the weekly chart on it, and you can see that that support broke through. That 849 is the real deal. And the fact that that got broken, FCX is going to head a little bit lower, more than likely. Probably get pretty boring. But down there in the $3 range, probably going to be good longer-term accumulation phase will begin there. Something like this. A kind of boring 3 to 4 years, then ultimately could start picking up some steam on FCX. Let's look at Shopify. Ticker symbol SHOP. I like Shopify. It's up 3% today. Was battling a lot of support recently, this 25.65 area, and I did think it was going to roll over a little bit more bearish based on this candle on the 8th. But notice, here's some of my analysis. Oh, I'm sorry, I said 8th. I meant 9th. If it breaks the high of that candle, then some people, aka some bearish traders, are going to be trapped. This is a very volatile stock. It is a newer IPO. Volume is a little bit light on it, so you would be trading just the shares. But this is and does appear to be a potential double bottom at a support with a buy low, sell high opportunity. Keep your eye on Shopify. I was bearish on the 9th. It has broken the high and did close above the high of that candle, and it is trapping some of the bearish traders, I think, who are trying to play this one bearish. If it continues to accumulate down here and pops, this would be a potential buy low, sell high on Shopify. Here's PayPal. Ticker symbol PYPL. PayPal, that trend line is for real. Not entirely sure what's going on. It's still trading sideways, still grinding. Not much to report on PayPal. Alibaba hanging out. We got some higher lows on Alibaba. Got some relative highs. Again, trading sideways, very similar to what it did last time. It was in this $86 to $80 range. Is just kind of grind and trade sideways. Volume is declining. Likely will continue doing this until earnings, which is about February 4th. So if the earnings are positive and Alibaba opens around 88, likely going to see Alibaba continue to run just a little bit. Silver, ticker symbol SLV, which is the ETF that tracks the silver prices. Still grinding, still going lower, and I still do anticipate it making some lower lows down to $10 in the next year or so, more than likely. Here's GLD, same thing, making lower lows, trying to reach its nice 756 support. Will it get down there? Probably at some point, but as of right now, I still don't see any signals to start picking up directional bullish trades on these ETFs. Now, as far as owning physical silver and physical metal, buy low, sell high. That's a strategy that works pretty well for a lot of investors. But that would be a longer term, very, very boring accumulation. Just put it in your I don't care what happens kind of portfolio, like a lot of the energies right now. British Petroleum, Royal Dutch Shell, Chesapeake Energy, Exxon Mobil, USO. A lot of these trades and these stocks are continuing to make some lower moves. And overall, I do think they're going to make one more lower low than they did have just a few days ago and really trap some of the weaker bulls. And then at some point, that accumulation phase will be pretty ridiculously boring, could last 2 or 3 years. But oils will be and continue to be a buy low, sell high in the future, at least in my personal opinion. Ladies and gentlemen, I'm done day trading for this entire year. Tomorrow, the market closes around 1 Eastern. It's totally closed on Friday. Make sure to enjoy your time with friends and family. Having a fantastic rest of your week. I will see you next week. And next week, all of our trading rooms, our morning room and our afternoon room, are open to the public, free to the world. It's an open house. 2016 is upon us, ladies and gentlemen, and I am pumped. Hope you are too. I'll see you then. And until then, remember, love life, live life, and trade. See ya.